What is going on, everyone? This is Blue Vein with Profiteer Trading, and today we're going to be having a discussion about why 90%, or the number that goes out there, why a majority of people that take a shot at trading are failing. So there's the saying, the 90-90-90 rule, that 90% of traders lose 90% of their capital, or at least the capital they're willing to trade with, in 90 days, right? That's pretty extreme. That goes to show that there's something there causing people to enter into this brand new environment and somehow have the confidence that they know what they're doing to put on their own money in such extreme fashions and lose a lot of it very quickly, and then leave the industry saying that it's a gimmick. Well, it's going to split down into two things. Either you're going to split one or two ways. You're either going to say that it's just a gimmick, no one can successfully trade, it's all made up just to liquidate retail money. Or you were going to say, I was not good enough, I didn't know what I was doing, and I'm not one of those geniuses from MIT who can crack this market, right? So that's typically how you're going to split it out. However, the main lesson, if you are someone interested in trading, that you should take away from this rule is that you should not be one of the 90% that lose 90% of their capital in 90 days. What does that mean? For the first 90 days, you should not have any capital on the line for more than 90 days. That is ridiculous that anyone in their right mind puts on their own capital in 90 days. Would you, if someone came up to you and asked you for 10 grand so that they can learn how to trade with it, are you just going to give them the money? No, you're going to say, show me you actually know what you're doing. Show me I can trust you with my capital. And people never do that to their own money. It's lunacy. Now, moving into more of the incentives, there's definitely that industry of furus and get rich quick. Everyone's on their social media stories, posting pictures of themselves in Lambos and doing all that jazz, trying to create this narrative that if you simply follow these simple 3 steps and buy it when it goes down here and sell it when it goes up here, you too can be living in this mansion and having these Lambos in a year or two, right? That's the lifestyle that they sell, and a lot of people see that and they enter trading as this ability to get rich quick, but they don't have a passion for markets. They're there because they're looking for money. They're not looking for the actual skill development and true what I would consider just fascination with what markets are and how they operate. So you got to make sure if you want to get into trading, you understand it's going to take a long time. It'll be the hardest job or hardest thing you've ever tried to do. And that lifestyle, even when you become extremely successful at trading, you're not going to, by the time that happens, you're not going to want the Lambo. You're not going to want the mansion, right? Because you understand how the money sitting in your account, sitting in your investments, is a much better location than the money in a depreciating asset like a Lamborghini. In most cases, I'm sure there's some Lambos that you could probably sell for a higher price. I'm not sure. Now, moving on to a lack of serious development. People say, all right, I'm going to start trading. I'm going to buy this course, take the course, know how to trade, and then I'm going to trade. And they have jobs, they have lives, they have all these other things going on. They treat it as a hobby, not a job. One of the crazy things about markets is that it's a place where you enter it and there's zero rules. No one is telling you you cannot buy here. No one is telling you you cannot sell here. No one is telling you how much you can and cannot buy. Right? So what that does is it creates this totally open, free environment for you to operate within. And a lot of failed traders never understand that we are humans. And there's a reason we have structure and orderly societies with rules. And we need that in our trading as well. You can't just do whatever you want. You still have a boss. You still have a boss, and that is the market, and that is your alter ego as a risk manager of yourself, right? So you cannot treat it as a hobby. It is not a hobby. If you're treating it as a hobby, you might as well go to the casino, because that's the same. You're probably going to have higher odds at the casino, honestly, right? Because when you go to the casino, you understand and you accept that you're taking risk. Most people don't ever accept the risk that comes with trading, and they think that the markets are something to be conquered. They think, oh, I just need to learn this one last tool, this one last indicator, this one last thing, and it'll click and I'll be able to solve the markets and conquer them. No, never going to happen. Never going to happen. Doesn't matter if you've been trading for 20 years, you're still going to have a large distribution of losers, a large distribution of winners. That is the name of the game. It's probability based, not some linear line equity curve. Now, when they trade, when they finally sit down at their desk, pull up their charts, have their indicators flashing and their super complicated, overcomplicated system that they don't even know how to use, they're playing a video game. They're not actually applying learning. They're not actually paying attention. They're just watching the colors flash in front of their eyes and pushing buttons, right? And then they're not keeping track of anything they're doing. They're not journaling. They're not plugging their or their statistics into a program to see if they actually have a positive expectancy. They're just paper trading, for instance, and buying massive quantities of something and selling it for 2 ticks, and then they see this big P&L at the end of the day, and they're like, oh, look at this, I finally figured it out, even though they just totally disregarded the last 6 days of enormously just as large negative P&Ls because they held some paper position. So there's zero professionalism within the way a lot of people treat trading. There's no review process, no, okay, here's things I'm doing good, here's areas that I need to improve, and this is how I'll improve them. And that comes along to the development path for progress. You need to know at what stage in your trading you are in, and you need to have quantifiable things that you have to then accomplish before you can move on to the next stage. So if you are in the learning stage and you finally have a system, you've identified, you understand how to read markets, you understand how to generate a trade idea, great. Now you are trading paper or simulated capital, right? You need to say, I need to have this win percent with this average winner to my average loser for 1 month, 2 months, whatever it is, straight. And at that point, and only at that point, can I put any live capital on. And when I do put live capital on, it will be in the smallest possible increment. Right? That's how you need to treat trading, is as if you were trying to prove to somebody else that they should give you their money. Lack of proper education. Those who fail teach. There is a lot of trash on the internet when it comes to trading. There's also a lot of really good stuff. And unfortunately, the good stuff is usually overran by the bad stuff, because the good stuff comes in the form of a ugly PowerPoint with horrible mic quality, and the bad stuff comes in the form of 4K high quality editing, ninja Lamborghini flips, cutscenes, and fancy flashing indicators. And people get drawn to the flashy stuff, and that's just how it is. And you see sign up for my list, buy my course, and I'll teach you the 3 simple steps to master the markets and make yourself a millionaire and economically free. And they're playing on your emotions. It's as simple as that. They're not traders. They, in most cases, maybe they had tried to trade and then they couldn't figure it out, or it wasn't as profitable, and they said, hey, I know enough about this to find someone who doesn't know as much as me and convince them that I know everything that there is to know, and then sell them this course. And then you sell enough courses, and all of a sudden you have all of this income to then bolster your success as a trader. And so you make it seem like all the money you're making is from trading and not from course sales. It is what it is. I would be very cautious about any educator who is promoting how much money they make every day. And actually have some background in trading. Have some age there, have something that you can point to and say, yes, this person knows what the fuck they're talking about. Bail once they discover it never gets easy. And this is just the boom and bust cycle, and people, I think, eventually come to the realization after losing some money, making some money. Maybe they're just trying different things, can't figure it out, and they had been on this thought track that all they had to do was figure this one last component of their system out or fix this one last mental error, and then trading would all of a sudden become easy. It wouldn't become something that they're constantly having to work towards and improve on, and life would be easy. And that's just not the case. It is a hard job. You are always looking to improve and fine-tune your craft, or you will drown. It is a competitive game. And I think some people realize that, and realize that it's going to take that extreme addiction to markets and that extreme addiction to improvement and self-reflection to become consistent. And they're either unwilling or do not believe that they have the skills to do that. So they just quit. Sim to live failure, boom and bust cycle. This is all about psychology, right? People sim trade, they have their strategy, everything's going good. They're sim trading. This was me just not a few months ago. And they're in this boom and bust, boom and bust, boom and bust. And they switch to live, all convinced after making tons of money in the sim account that they're going to do great in the live account. And then all of a sudden, they, lose their first trade. And they're like, holy crap, I just lost all this money in one trade. This is crazy. And then the next trade they take, they're so afraid of losing that their subconscious mind is filtering out anything that would associate them with loss. So if they're looking to buy the market, every piece of market generated information that is coming through their brain is under the filter of, I need this to go up. I cannot have this market go down because I am trying to buy this market. So they're not going to actually be paying attention to what they should be, which might be some massive seller stepping in or just plummeting cumulative delta, right? Psychology is way more important than your system in many, many cases. You need both to be consistent, but if you don't have the psychology, your system doesn't matter. All right, so you want to make it as a trader. Understand the nature of markets, stress trader psychology, understanding how to get into that opportunity flow, and be open and willing to interpret market-generated information. I know personally that this takes, I do morning affirmations where I'm literally standing in front of a wall talking to myself for like a minute, just saying, repeating phrases that cue up these subconscious directions, using the ideas and theory of neuro-linguistic programming to then convince your subconscious mind that you are open and willing to interpret market-generated information. Biases. Don't have a bias. Trade what you are seeing at that moment. If the market is plummeting and plummeting and plummeting, but according to your system, it should be recovering at this point, don't catch the falling knife. Stop catching the falling knife. The market is plummeting. It is imbalanced down. You are not buying that market until you start to see some strength multiple times from the buy side. All right. Understand what your job is as a trader. I have a video on that as well. If you just look up that on this channel, you can learn more about that. Accept that this will be the hardest thing. Okay, that's kind of over-exaggerated. There may be, I don't know what your life is. It's not going to be an easy job. It's one of the hardest jobs that you can have out there. And there's a lot of benefits to it, and there's a lot of cons to it. Variable income, the loneliness factor, high taxes. You're not going to have a 401k or some safety net with health insurance, all that. It's all on you. You are 100% responsible, which is one of the pros, and it's a double-edged sword. It's a pro and a con, right? It is a business. It's not a hobby. Capital preservation is everything. You live and die by your risk management. And again, 90-90-90, do not be one of those people. You should not have any money in the market in the first 90 days that you're learning how to trade, at least. Probably longer. And it's a competitive profession. It is a skill. You cannot be a professional golfer after golfing for 3 months. It takes time, it takes repetitions, it takes practice, identifying errors, creating systematic ways to improve those errors, improving those errors, and moving on. All right. Go ahead and comment if you have any questions. Reach out to us on Discord, and I'll see you in the next one.